I will be moderating the panel here at Bloomberg with Mitchell Eichen, founder and CEO of MDE, as well as Richard Lashley, principal at PL Capital. PL Capital, by the way, is a private equity firm that is focused on the financial services industry. Mitchell and Rich join me now to talk about the key trends that are driving change in the industry and their suggestions for future financial advisors. So good to have you both here on Fast Forward. Welcome. I've had a chance to speak to both of you at length about the future of the industry. Unfortunately, we don't have time to go into it all, but there are some things that I know we're going to hit on tonight that I thought were quite fascinating about how this industry is going to evolve. One of those things is trust, is sort of the way we communicate, the way we market, but trust is at the core of that. Why don't each of you talk a little bit about how this industry, which has really become sort of blamed for everything, is going to gain back trust?
Well, I think, Lisa, the first thing we need to have is full disclosure. And disclosure doesn't mean giving somebody a legal document that's this thick and expecting them to understand it. It means explaining investments to investors on their own terms. It also means giving investors transparency so they can understand exactly what they have. I think liquidity is a very big issue. And the other thing in a post-Madoff world that's huge and was always huge for us is third-party custody. So an investor always knows, and he has verification from a third party, that what the advisor says is actually what he has.
Rich?
Yeah, I think in our case, we run a small hedge fund, private equity firm, and we get most of our clients from referrals. So the level of trust is the personal connection. So I think that's always going to be part of the business. But we have third-party auditors, third-party custodian. We use an outside prime broker because they want the bells and whistles to control the assets. So it's personal connections, but it's also the institutional rigor of the fund.
So I worked in the wealth management industry for quite a while, and one thing I'll say is that there was a lot of information always available to people.
Too much information.
Almost too much information. So, you know, transparency, I thought, was there. The question was, how do you get people to digest it? And this was an interesting thing, Rich, that came up in, I know, the presentation that you're going to share tonight, social media. I mean, we do live in a world where it's actually easier to digest information. It's easier to get the information as well.
Yeah, there's the huge problem is all the regulatory and compliance issues. I was reading a story yesterday about Morgan Stanley Smith Barney, that they want their brokers to use Twitter, Facebook, and all these other things, but you can imagine the compliance departments, because you can't control thousands of brokers out there sending messages, as we know from the political scandals. There's a huge disconnect, but absolutely social media is the future of the industry. Now for us, it's a little different. We're still stuck in email land and sending out quarterly newsletters, but connecting with clients, if you're interacting with clients on a regular basis, you have to have social media.
Mitch, let me ask you very quickly on the notion of transparency. And Rich, I know this is something you also talk about, ETFs. That's a growing part of the market. Is that something that figures into your conversations with clients and portfolio management for you?
Absolutely. In fact, we have a unique strategy that combines the best of all worlds. It uses ETFs and options actually to allow people to craft their own returns, because ETFs, as we know, give you transparency, they give you liquidity and low fees, but they have basically linear returns. Hedge funds, on the other side of the coin, give you asymmetrical returns, but by combining ETFs and options together in a single strategy, it allows investors to pretty much dial their own risk from protect, very conservative, to power, very aggressive, and it puts the control in the client's hands.
All right, unfortunately, we got to leave it there. We got to go to break. I do look forward to continuing the dialogue. Thank you guys so much. That was Mitchell Eichen and Richard Lashley.